Yes. Yes. Before we start with the presentation, I have a small hint to you all. Imagine you are budgeting for a big vacation and you have set aside some money each month in a separate jar or let call as a piggy bank, right? Specifically for airfares and hotel expenses. So could you relate this example with the any mortgage concept or something like that? I'll give you few seconds to think of this. Please drop your answers in chat box, or you may also unmute yourself and tell the answers. I'll wait for a few seconds. So basically, the hint is you have to imagine that you are planning for a big vacation and you are setting some money or keeping some money each month in a separate jar or call it as a piggy bank for the traveling expenses. So could you relate this hint with a mortgage concept? If yes, please drop your answers in the chat box, or you may also unmute yourself and tell the answers. I'll wait for 5 seconds for the answers. All right. Thank you, Tim. Thank you for your answers. So I guess most of you would have guessed it right. So the answer is escrow account. So today we are gonna learn about escrow account. What is escrow account? What is the benefit of having escrow account? Everything, right? So let's start with the escrow. What is the escrow account? Escrow account is also known as impound account. So guys, team, another name for escrow account is the impound account. An escrow account is a secure financial tool used in mortgage lending to ensure timely payment of property taxes and homeowners insurance. It safeguards both the lender and the borrower by guaranteeing that these essential expenses are covered. So basically, escrow account is a separate account where um, it ensures the timely payment of insurance and taxes of the borrower. A simple, in a simple term, it is a separate account which ensures the timely disbursement of insurance and taxes of the borrower. All right. If you have any questions, please drop your queries in the chat box. I will surely respond to them. So let's move on to the next slide. Okay. Monthly mortgage payment consists of PITI. So we know that borrower have to pay monthly mortgage payment. I mean the payments every month. So let's break down the monthly mortgage payment which borrower pays, right? So the monthly mortgage payment consists of PITI. P stands for principal, I stands for interest, principal and interest, T and I, tax and insurance, right? So the monthly mortgage payment, the breakdown of MMP, okay, monthly payment consists of PITI, principal and interest, tax and insurance. So when we talk about principal and interest, it is fixed in nature. Okay, it's already specified and fixed as per the note document. The note document clearly talks about the principal and interest amount. So it don't fluctuates. It is fixed. It is fixed in nature, right? When you talk about tax and insurance, it is a portion of your escrow. It is an escrow portion, right? But the tax and insurance fluctuates every year. It is not fixed in nature. The reason behind the market fluctuations. The insurance and tax cannot be fixed in nature. It's always fluctuates. Okay. So now we got to know the breakdown of monthly mortgage payment. The monthly mortgage payment consists of four parts. One is principal, interest, tax, and insurance. Principal and interest are fixed in nature as per the note document. It's already specified the amount in the note document, right? When it comes to tax and insurance, it is fluctuate in nature. It may fluctuates every year because of the market fluctuations, right? Okay, hope you got this Hope you understand this concept. If not, please drop your queries in the chat box. I will surely look onto that and reply it in the chat box. Thank you. So let's move on to the next slide. Escrow account. What is an escrow account, team? An escrow account is a separate account held by the lender to collect and manage payment for your property taxes and insurance. Like we discussed in the previous slides, it is a separate account which is managed by the lender or a servicer, okay, for the timely disbursement of the timely payments of the insurance and taxes. Okay, now next point it comes is why is it needed? Why it is important to have an escrow account for the borrower or for the lender or the service? Escrow accounts help to ensure that your taxes and insurance are paid on time, preventing potential penalties and protecting your investment in your home. So basically, escrow account helps for the borrower to ensure that there is a timely payment and of insurance and taxes. See, as a human being, we are tend to forget the disbursement, the payments, the insurance and tax payments. Okay, we are more likely to forget our, the future payments or future disbursements or future payments towards the interest and taxes. So here's what the escrow account helps the borrowers, right? It helps the borrower to for the timely payment of insurance taxes from the escrow account. They don't have to worry about, they have to be less worried about the insurance and taxes because uh, whenever the insurance and taxes are due, it's automatically dispersed from the escrow account, so they don't have to worry about the insurance and taxes payments. Okay, who requires it? So is it mandatory to have an escrow account for all the borrowers? No. Some loan types requires the escrow account mandatory, some loan types does not require, right? Let's talk about that. Some mortgage types like FHA loans, Federal Housing Administration loans. So these are the loan types where the it is backed by the Federal Housing Administration, and these type FHA loans are required to have an escrow account. The escrow account is mandatory in with respective of FHA loans. It cannot be removed, right? When we talk about the VA loans are backed by the Veteran Affairs. Okay, these loans does not require to have an escrow account, but if the lender require for the borrower to have an escrow account, then the escrow account may be established in the future, right? When it comes to conventional type of loans, again, it depends on the investor, Fannie Mae, Freddie Mac, the private investors. If they want the escrow account, if they want the escrow account to be established or to be established on the account, it will automatically originate it. Doing the origination itself, the escrow account will be added to the account. If it is not required, or if it is required during the servicing of the loan, during the servicing of the loan, again the escrow account may be established during the servicing of the loan as well. Hope you have understand this concept. Again, if you have any queries, please put on your queries in the chat box. I'll quickly review the queries and respond to it. Okay, let's move on to our next slide. Purpose of having an escrow account. The primary purpose of an escrow account is to collect the funds every year. The primary purpose of an escrow account is to collect funds from the borrower throughout the year so that the lender can pay the property taxes and insurance premiums on borrower's behalf whenever they come due. Exactly right. So what is the purpose of having an escrow account? The primary and the most important purpose is to collect the escrow funds every month in order to pay for the insurance and taxes on borrower behalf. So that the borrower is not worried about the payments of insurance and taxes, right? And what are the benefits of the having an escrow account? Let's study this. Let's learn this. One is timely payment. So having an escrow account ensures the borrower for the timely payments of insurance and taxes, which means they have to be less worried about the timely disbursement or timely payments for insurance and taxes, right? The next benefit of having an escrow account with the lender perspective is it protects lender from financial losses due to unpaid property taxes or insurance payments, right? If let's assume if the borrower forget to pay the insurance or taxes, then as we know the tax liens are the superior liens. They are superiors to the mortgage lien as well. So it is important for the lender to ensure that the insurance and tax payments are paid consistently and accurately every year. And that's the reason it is important. It protect the lender as well for the timely payment of insurance taxes. Okay, borrower protection safeguards borrower from late payments, penalties, and potential foreclosure. So, yes, of course, like we discussed in the previous slides as well, the escrow account safe ensures that there is a timely payment of insurance and taxes from the escrow account, and which helps the borrower to secure the property and to save from the late penalties and all. It ensures the borrower to pay the insurance and taxes on time. All right, team. If you have any questions, please unmute yourself. You may ask the queries now. I will pause myself for a few seconds, or you may also drop your queries in the chat box as well. Yes, I'll wait for a few seconds. Okay, all right. Uh, okay, let's move on to the next slide. Okay, if you guys don't have any queries, then I have few questions before we begin with the our next slides, right? So in the beginning of the slides, I told about the another term or another name used for escrow account. What is that? Please drop your answers in chat box, or you may also unmute yourself and tell the answers. I'll wait for a few seconds. Another term or name used for escrow account. Team, please drop your answers in chat box, or you may also unmute yourself and tell the answers. The another name used or another name or another term for the escrow account. All right, thank you for your answers. So the answer for this is impound account. As we discussed in the beginning of the slides, the another term or another name used for the escrow account is also known as impound account. All right, so